So you're curious about crypto, but every time you try to figure out where to start, you just hit a wall. If that sounds familiar, you are in exactly the right place. Today, we're going to unlock that first and most important door, crypto exchanges. I mean, it can feel like this big, exclusive club, right? You hear about Bitcoin, you see the crazy headlines, but that very first step, like how do I actually buy some, feels way more complicated than it should be. Trust me, you're not alone in feeling that way.
But here's the thing, the answer is actually pretty simple. Your journey, pretty much every time, is going to start at a crypto exchange. Just think of it as the main entrance, the front door to this entire new digital world. And today, we're going to walk through it together.
Okay, so let's get right into it. What in the world is a crypto exchange? It sounds super technical, I know, but the basic idea is something you're already familiar with. At its heart, it's just a digital marketplace. You know how a stock exchange lets you buy and sell shares of companies? Well, a crypto exchange does the exact same thing, but for digital money, like Bitcoin and Ethereum. It's the place that connects buyers and sellers from all over the world, 24/7. Now, once you step through that front door, you'll find there are two main paths you can take. It's definitely not a one-size-fits-all situation, so let's break down the huge difference between centralized and decentralized exchanges. Okay, so on one path, you have centralized exchanges, or CX. The easiest way to think about this is it's like your traditional bank. A company, like a Coinbase or a Binance, holds onto your funds and handles all the trades for you. It's familiar, and honestly, it's usually way easier for beginners. Then, on the other path, you have decentralized exchanges, or a DEX. This is more like a peer-to-peer flea market. You are always in control of your own money, and you trade directly with other people using these cool automated programs called smart contracts. And this is where you really see the trade-offs. With a CEX, you get that super simple, user-friendly experience plus customer support if something goes wrong. But you're trusting that company with your money. With a DEX, you get total control and more privacy, but it can be way more complex. There's no help desk to call if you mess up. So the choice really boils down to this. Do you value convenience more, or do you value control more? All right, let's get practical. Since most people start out with a centralized exchange, let's just walk through what it actually looks like to open an account. So, you're going to run into this term called KYC, which stands for Know Your Customer. Don't let the acronym intimidate you. It's the exact same stuff you do when you open a new bank account. You give them your name, you upload a picture of your ID. It's not about being nosy. It's a standard security thing to stop fraud and follow the rules, which at the end of the day helps keep everyone on the platform safer. Okay, now listen up, because this next part is maybe the most important thing we'll talk about. Before you even think about putting a single penny into your account, you have to lock it down. I mean it. Create a strong, unique password, something you've never used anywhere else, and most importantly, enable two-factor authentication, or 2FA, right away. This one little step is a massive shield that can stop a hacker cold, even if they somehow manage to steal your password. All right, your account's set up, security is on lockdown. Now we got to talk about the risks. Look, this isn't to scare you away. It's to empower you. Knowing the dangers is the absolute first step to avoiding them. The risks really fall into a few main buckets. You've got the direct threats like hacks and scams. You have the pure financial risk of the market just going crazy. Then there's uncertainty around government rules and, of course, the danger of fake projects. Let's hit them one by one. First up, the big one. The one everyone immediately thinks about, hacks and scams. Because these exchanges hold billions of dollars. They are, you guessed it, huge targets for cybercriminals. So how do you protect yourself? Well, we already talked about your number one weapon, 2FA. Turn it on. After that, always, and I mean always, double-check the website address before you log in. Scammers love to make fake phishing sites that look real just to steal your password. And here's a pro tip. If you're holding a large amount of crypto for the long term, get it off the exchange and into a personal hardware wallet that only you can control. The second big risk isn't about someone stealing your crypto, it's about the market itself. Crypto prices can be wildly volatile. That means they can shoot up or crash down in a really short amount of time. To handle this, there is one golden rule. And please burn this into your brain. Never invest more than you are truly prepared to lose. Seriously. You can also use tools on the exchange, like a stop-loss order, which basically tells the system to automatically sell for you if the price drops to a certain point. It's a good way to protect yourself from a sudden dive. And the third major risk is a little more out there, but it's super important. Regulation. The laws around crypto are still a work in progress, and a sudden rule change in your country could totally affect an exchange or what you're allowed to do. The smartest way to play this is to stick with the big, reputable exchanges that are clearly trying to follow the rules in your country. And, just paying attention to the news about crypto regulation is a huge part of being a smart investor. Okay, deep breath. We've covered what exchanges are, the two main flavors, how to get started, and the big dangers to watch out for. Now, let's pull all that together into a final handbook for smart, safe trading. Think of this as your pre-flight checklist. Number 1. Security is always, always first. That means 2FA and passwords you don't use anywhere else. 2. Don't put all your eggs in one basket. 3. Remember, exchanges are for trading, not long-term storage. That's what personal wallets are for. 4. Start small, get the hang of it before you go big. And 5. Be paranoid in a good way. Double and triple check every single wallet address before you hit send. At the end of the day, it all comes down to this. Exchanges are incredibly powerful tools, but that's all they are, tools. Your safety and your success in this space are going to be determined by what you know and the good security habits you build.
So look at that. In just a few minutes, we've gone from that feeling of where do I even start to having a real map of the territory. You know what an exchange is, you know the different paths you can take, and you know the best ways to stay safe. You've got the foundation, so the only question left is what's your first step going to be?